Alright, welcome back to the Self-Educated Economist channel. Today we're talking about taxes, and this is Personal Finance 103. And I'm going to go over the difference in taxes and different tax structures, but we're also going to, I'm going to let you know a little secret. This is why you can't tax the rich. You hear AOC and you hear the squad hollering, tax the rich, tax the rich. And this is why taxing the rich doesn't work. So let's dive right in. Now, right here you have your four types of taxes. You have the E for employee, the SE for self-employed, the P for passive investment, and the I for active investor. Now, there's different ways of putting this. Basically, the ones that pay the least amount in taxes are going to be right here. That's going to be your passive investors. Now, the ones paying the most in taxes are going to be the employees, and this is by design. But let's go over why and how this is that way. So, step number one, we're going to step into the employee side. Now, under the employees, they get their paycheck each week, and on their paycheck, they'll have the gross amount that they made for the hours worked. They'll have their Medicare tax, which is 7.5%, which is truthfully, anybody in the self-employed sector will know this is 15%. Your employer pays 7.5%, and you pay 7.5%. So let's move on. Then they take out your income taxes. You also have your 401k and your insurance taken out of the gross amount. And what that's left with is the net amount, which is what you get when everybody's done taking everything they can out of your pocket. And that is, quite frankly, the easiest way I know how to put it. It sounds funny, it sounds mean, but truth's the truth. So, how do businesses and corporations and the rich protect their wealth, protect the amount of money they've made? Well, let's look at their business side. Over here you have the gross amount that the business brings in for sales, whether it's sales or the gross amount made by the business. Okay, then they get to write off all their expenses. Now, these expenses can be certain meals if they take a client out for dinner, if they take a potential client out, if they had to drive somewhere. For instance, they had to drive from city to city for a meeting. If they had to go to the store, that's mileage gets wrote off on that car. If it's a company car, then they get to write off the total expense on the car as far as the maintenance on the car and the loan amount. And they also get to depreciate the amount that car is worth for the next 5 to 7 years. The same with any equipment that they buy. Anything that they buy for the business that is big ticket items, they get to count a depreciation amount for the next 5 to 7 years on that piece of equipment. Not to mention, your wages are their expense. So that gets taken off. In some cases, depending on how the business is set up, if it's structured as a corporation or an LLC or an incorporation, there's difference of ways. I'll not get into all of it, but everybody's wages are an expense of that business. So at the end of the day, business is about what you can keep, not exactly so much about what you can make, because everything that can legally be wrote off with taxes is money that you don't have to pay taxes on. Now, when you get down here, they pay taxes on the net amount. After they've spent everything they can spend, then they pay taxes on the net amount. And of course, they have that 15% self-employment tax, depending. If it's a big corporation, they'll have their CEO. Then you'll have your actual investors, which will fall under this tax bracket, or passive investors, which fall under that one. So That is how the rich protect their wealth through corporations. Corporations, like I said, the easiest way to put it is they do their sales and they spend everything they can legally that they can write off, and then they pay taxes on what's left. Employees, on the other hand, we're taxed first thing. They may let you keep that 401k money out, but here's a trick to your 401k. You may not have to pay taxes, and you think you're getting around something by paying by using the 401k. Once that money goes in the stock market, say for 25 years, and say your $1 has now grown to $2,500, so when you pull your money out of your 401k, it's taxed then. Well, it only cost you $1 to put it in, but you invested it smartly and it grew to $2,500. So instead of paying taxes on the $1, you're now paying taxes on $2,500. So that's a good catch for your 401ks. I don't really like them. I like to be able to get the money that I make right now in my hand and let me deal with how I want to spend it, instead of giving me a list of funds I can buy that may go up or down in price. I can think of more creative ways of spending money, and maybe not. I can think of better uses for money, we'll put it that way, than putting it in a 401k. So, employees, taxed first. Businesses, taxed last. So, when you look at all these rich people, or wealthy people, or business owners that are successful and doing well for themselves, remember, they spend all they can spend and then pay taxes on what's left. You pay taxes as soon as they write you a check, and you're left. And what you're left with is what you're allowed to have after they're done taking everything they can from you. Oh, and don't worry. Since we're on the issue of taxes, your tax for your car is a tax. The wheel, as far as the wheel tax goes on that. There's taxes when you buy fuel to put in your car, sales taxes, you name it, they found a way to tax everything. So even when you get this net amount, they're still going to take more taxes out on you. For these guys, everything they spend is tax deductible, and they only pay taxes on what's left. That's why taxing the rich will not and does not work, because they will find a way to hide that money in a corporation, or shall I say protect that money inside of a corporation, so that it is not taxed as heavily as it would be if they were on the employee side. So they didn't get rich by not figuring this out. So taxing the rich, well, let's just dig into this for a minute. Why are we paying taxes to begin with? If you go back and read the income tax legislation, when it was originally drafted, it was meant to be a tax on the richest people of the nation. They weren't supposed to be taxing those of us out here working. When they couldn't get enough money out of the rich because of them keeping it inside corporations and using this tax advantage to keep from paying those taxes, then they had to turn to the middle class and the poor to start collecting taxes from them to get the amount of money they were looking for. So that's just a brief history lesson on taxes. And so yeah, the tax the rich don't work. It's been tried and tried and tried. It don't work. And they make the history of a corporation goes all the way back to England and back to when people were selling ships, sailing ships around the world and bringing in money. The rich, 5 or 6 of them would go in together. Instead of putting all their money on one boat, the rich would buy 5 or 6 boats. If they lost one, they still had income from the 4 others. And that's how corporations first got started. It was to minimize the risk of them losing the capital. If they got 5 people goes in on this one boat, well then, if we got 5 people going in, they can buy 5 boats, and we lose one of them, we still got income from 4 boats. If I put all my money in one boat, and I'm the owner of the boat, and that boat goes out to sail and it sinks, well, there went my fortune with it. Now I'm poor. So they've been at this a long time. You're not going to tax the rich. They'll pay what they have to pay. And truthfully, if you want to know what the IRS was up to wanting to look into people's bank accounts under $600, that's because they've wasted time and money going after these corporations for tax fraud, and they've covered their hind ends so good that they can't find nothing to do, nothing to catch. So they've turned to us to try to squeeze the rest of what they can out of us, the little guys. So there's your hole in the ship for your taxes and taxing the rich. But anyways, we'll hit the like and subscribe button to follow for more content, and hit the notification bell, and you'll know when there's a new video has been uploaded, and I would certainly appreciate it. Keep tuning in for more information on finances, and we'll try to get back into some macroeconomics before too long. I know the stock market has been tanking, to be nice about it, since the Federal Reserve has been cutting the QE back, and we can talk about that on a separate video. So for more content on macroeconomics and personal finances and different things that we might can get changed in government to make things work a little smoothly, how money is created, anything to do with money, stay tuned to my channel. Have a good day.